It is currently 10:15 p.m. Vienna time. I'm in Vienna, Austria at the moment, heading to Monaco tomorrow. It is 1:12 p.m. Pacific Standard Time and 4:12 p.m. Eastern Standard Time. And I'm just going to do a bit of a review on the last couple days. First thing I want to show you right here on your screen is a very, very important building, ladies and gentlemen. And that building is the Parliament building in Vienna, Austria. And the reason that building is important is because the government of Austria did not fold to EMU, and they held bank secrecy because it is stamped in the Constitution, the bank secrecy laws in Austria, very strict jurisdiction, and very tight security. It is against the law to discuss clients and accounts. Members of the bank cannot discuss any clients and accounts outside of the bank. And you'll say, well, that's not unlike our laws. But don't get me wrong, there is a tremendous distinction between the two, and in terms of adherence to the law and or compliance to the law and non-compliance. In any event, bank secrecy is very tight in the Constitution, and they fought the EMU and the Eurozone, who was attempting to force them to offer some liberties and flexibilities to their bank secrecy laws. But Austria held tight, and because you know what? We don't even know if there's going to be a Eurozone in 10 years. And, good for them for doing so. Very important building. I spent a lot of time around there, and I was very thankful. Next slide, please. The Croesus was one of the first gold coins ever stamped, called the Lydia, and it is in the 7th century BC, and stamped by the Lydian kings, or started by the Lydian kings, and they also had a very unique stamping technique. As you can see here, one of the first gold coins ever. This is from the Kunsthistorisches Museum in Vienna, and across from the Museum of Natural History, and I spent some time in there. I spent hours in there actually, and one of the first places that I went was to the currency and the coins sections. Although I'm not a numismatist. One more point I want to make here. So that's the first gold coin ever. So if you start a company, you may want to name your company Croesus. I want to take you here to the Guldiner, and it was a coin started in the 14th century AD, and the mint year, of course, was 1486, first year. Started by the Archduke Sigismund in Tyrolia, and what's interesting, the interesting history behind this coin, and it's a very important coin. There was a period of transition between the Middle Ages, and what happened was Europe's monetary system was really being bewildered by a multiplicity of small minted coins by a great number of rulers. And what happened was it created a lot of complications in conversions, and it hindered a lot of trade because they weren't just quite sure how to sort of value one currency versus another in the different economies, even way back then. And so what happened was, of course, Italy had been using gold coins because they were one of the heaviest trading entities at the time in the 13th century, and effectively the gold coins were starting to make the smaller silver coins useless because you needed a ton of them to make up for the value of the gold coins for larger transactions. And what happened then was in Tyrolia, here of course Tyrolia is in Austria, being at an Austrian museum, they the Archduke Sigismund, of course, had made this silver coin, which is this one here, the Guldiner, and this coin had what they did was they made this coin so it had a weight that was equivalent to the largest gold coin, which at the time was called the florin. And this currency, what's important about this currency is that it became kind of a multinational currency or a global currency, or similar to what, or like a world currency similar to what the U.S. dollar is today. Okay, so this was sort of the U.S. dollar, or the global currency of its time, before, of course, currencies evolved beyond that point. And it held that for quite some time. All right, enough of that. What I want to do here is, I'm not going to show you very much because I'm pretty tired, and I was out at museums all day, as you can tell. I just want to go over this as after the fact. I didn't trade today. I didn't watch the markets today, but I want to go over some after the fact stuff. And I'm going to go back a little bit into history here. We saw here, remember our retest, our key reversal here at 190, and then price came down to the 5.0, created this downswing, and I just want to show you this downswing here. If we take this downswing, so we had one downswing, boom, so one downswing, the high to the low, retraced, fell to the 127% extension, the 62% retracement, and the level of, there's a level of resistance becomes support back there. We saw that already, and this is in a previous section. Now we take the next downswing from this high to this low. Price retraced, did not get up to the 38% retracement, 10-day moving average, and price starts to fall. Now, at this time, what I did was, when price was right here, actually, I want to go over this. This is important. When price was here, right here, what I said was, and I did a review when price was right here, and you can go back and double check me on this one. I said, I'm not ever going to tell you to trade at a certain level because I don't know what's going to happen between now and the time. All I'm going to tell you is what levels to watch. And at this time, I said, watch this level. Watch 86 right here, 86.30, watch 80, you see that right there? You see it? 86.30, watch 86.30 and 8600. Why 86.30? 127% extension, 162% extension from this downswing, and the 62% retracement from the big upswing, all converging at the same point. Watch 186.30, okay? Watch 186.30, folks. Boom, 186.30. Of course, you guys all know 18700, a bounce at 187. Look at the bounce. The bounce went up to 43, 8700 to 43, and down to 86.30. 62% retracement. Geez, do Fibs works? I don't know. Okay, now what's MACD doing? MACD is diverging. Boom, we got a bounce at 86.30, like somebody said there might be. I didn't say there would be. Okay, I said watch that level. All right, because I don't know if there's going to be a bounce there. I just say that that's a level that I would look at. Price retraces, okay, rallies to not quite 8,900, but in any event, what do we have here? You see how price rallied well beyond this. We have what's called a potentially key reversal day. Well, what happens on a key reversal day? So we pull our fibs from this low to this high. Now we watch the 38% retracement, which converges with 8,800, which converges with the 10-day moving average. And then let's check our central pivot for the day. Going through this quickly, folks, because I don't know if I'm going to be able to get this. I'm on limited internet here, so now what we have here, you can't see it, but right below this 38% retracement, let me just move it forward here. Right below this 38% retracement, look here, we have here, you see this right here, that's called a central pivot point, which on key reversals days, central pivot point, 38% retracement. Now we saw price come down here, middle of European session, and test these levels. What else do you see? Okay, there's 8,800. It slipped quite a bit through 8,800, but that's fine. The bodies have held above. But in any event, what else do you see here? Yes, we see a previous level of resistance. All right, which, because you guys are experienced now and you're understanding the market, whereas all of your rookie friends, and you try telling them how important support and resistance is, and they don't want to listen to you, well, you're the one making money. Okay, so there you have it. Key reversal day, support resistance, 38% retracement, central pivot point. Nice bounce. We don't know what's going to happen. We're effectively in a pretty large consolidation at the moment. All right, that's a pretty kind of a large consolidation. It was seemingly bearish up until this key reversal day, which could mean we could have a leg up. And on the larger time frames, this is actually, we're looking kind of tweezer bottomish. Euro, just want to quickly show you Euro, and I'm just going to stick to, I'm not going to get into a lot of details on this. I just want to show you Euro, okay? Test of the previous day's low, boom. Test of the, no, this wasn't previous, 2 days previous. Test of the previous day's low, boom, key reversal. As I talked about in class, these are often key reversals. When this low doesn't hold, we often see an aggressive move in the opposite direction. Of course, there were some fundamentals there to help it out. Rally, retracement to 38% retracement, 10-day moving average. And there's one thing I forgot to mention on the Euro, and that is this. Let's show it on a 5-minute, sorry, in the British pound. Let's show it on a 5-minute chart instead. No, it's not a good idea, because we can't see enough here. I'm just going to go back to my friend, the 60-minute chart, and I want to show you this right here. Here it is. Okay. Here's the low for the 21st, the high for the 21st/22nd. Asia, rally the next day, test the previous day's high, open of London. Open of London, Europe and London, test the previous day high, fails, it fails, and then it goes all the way down to 75 in the opposite direction. It goes from high of 83, it goes 100 pips into the opposite direction. However, you only really needed this move, and that's it. And okay, folks, that's it. Bye for now. I'm going to try and upload this thing, but I'm on limited space, and hopefully y'all get it. And I will catch you later. Be careful out there. Good luck in your trading, and don't do anything I wouldn't do.